to the session for trading psychology and mindset. And we have somewhat of a unique group today because we have people from the Price Action Mastery Certification course, as well as the Chart Pros chart subscribers. We probably won't even look at a chart, okay? We're going to talk about, things that are easy to say but hard to do. And you've probably heard about trading psychology and remove the emotions, and you got to have, an elite trader's mindset. But what does that really mean? And, it's really hard to cover a lot of that, in about an hour or so. So what I thought I would do is, hit the highlights, share with you some of the things that you may have seen in the course already, but also share some new things. A lot of it comes from things that I've learned in my certified mental performance coaching program that I took, but also more of it comes from experience that I've had from myself, experience that I've had with working with others, and you kind of put it all together. It's one of those things that as you mature with anything that you do, whether it's at home life, work life, friends, whatever happens to be, the more you do it, the more comfortable you happen to get with a particular skill set or hobby or job or whatever it happens to be. And trading's no different. It really isn't. And so we're going to move here. We do have some newer people, so I'm going to go through a little bit of background about Chart Pros and myself and the strategic relationships that we have. I know we have some new students in the course just this week. I know we have some new members in the trade room. And for some of you, this will be maybe a repeat, but please bear with us as we move through here. So, I'm Tom Winterstein. I am the founder of Chart Pros. I'm actually a serial entrepreneur. Chart Pros is one of 4 companies that I own all or part of. I've been a retail trader for over 20 years. I currently trade futures, Forex, commodities, equities, and options. Not so much equities, the straight stock itself, but equity options more so than the equities itself. And of course, over the years, I've learned to swing trade my retirement funds as well. Many of you know that my wife and I, we've been married over 30 years. We have 5 sons, and we just officially became empty nesters. Our last one went off to college this past week. So trying to figure that out. So I said, hey, let's schedule a webinar, fill up my evening. But anyway, Chart Pros, one of the things that we take a lot of pride in is providing education and market education related services around technical analysis and really helping traders develop and hone their craft of trading for themselves. You'll find that we're different than a lot of organizations out there. We pride ourselves in precise levels or zones as we do our charting. We're not a signal service. We don't send out text alerts. We're not going to tell you when to enter a trade. We're not going to tell you when to exit a trade. We're not even going to tell you what to trade, because that really comes down to individual styles and preferences and risk management and risk tolerance. And so what we're going to teach you all the things that you need to do around that, from a company perspective. And today we're focusing on, what are the mental aspects and challenges that you have to address from an individual standpoint to do that. We have some very key strategic relationships. Many of you know Michael Perigo. If you are involved or enrolled in the course, you know Michael intimately. That is his voice on there. That is not me in there. That is Michael. On the webinars, you'll hear me, and in the moderation of the discussion boards, that's primarily me. Michael was on one of the webinars that we had about a month or 2 ago. And of course, BTG, many of you came from BTG, the Binary Trade Group, from Sean Jantz and Ryan Smith. And we have a great collaboration together for the Price Action Mastery course, and the hundreds of people that have already completed that and carrying that torch forward. Something new for us is a relationship with NinjaTrader. We are a NinjaTrader education provider. And some of you may have realized or heard that a couple of weeks ago, we had our first presentation to what's called the NinjaTrader ecosystem. They've got about 60,000 traders. And so we were able to do a presentation to about 700 or 800 other folks about the last week of July. that was recorded, and it's got over 1,200 views so far. So if some of you heard of us through that presentation, we've got some new students and some new chart members, from that as well. So welcome to everyone, new and older. But our whole premise is, and this is an old saying, but we like to give it fresh meaning almost every day. Is give a man a fish and you feed him for a day. Teach a man to fish and you'll feed him for a lifetime. And so that's what we want to do. The people that have been around us for any length of time know that we want you to be not only successful, but be independent. We want to teach you and help you help yourselves. And for some people, that's a longer journey than others, but it is a journey. It is a process. It is something that you really never stop learning. You go through, but that kind of drives us. And if the people who know me, like I said, you kind of know that that's what inspires us. And as far as the price action mastery course goes, some of you may know this, some of you may not. I was one of the first students in there, and I had seen this guy named Mike Perigo in the BTG rooms, and he was posting these phenomenal trades, and he had these charts that just looked out of this world. But I didn't understand how he did it. And I'm a very logical person. My undergraduate work is in computer science and have a master's degree in finance. So I'm a very logical person. I like to understand how things work, but I didn't understand how he could do these charts in with the level of precision that he had. So when the course was offered through BTG, I, like many of you, jumped at the chance to learn from Mike. So Mike was not only a great teacher for me, but a mentor for me and for many other people as well. And as the chart subscribers know, he's very active in our chart room, posting a grid every day, or a couple of grids with about 14 different charts of Forex and the indices and futures, including oil and gold. So it's really been a win-win relationship. It's great that I get to work with my mentor and teacher, so to speak. And it's exactly the model that Mike has professed for, as long as I've known him, for the last 5 or 6 years, is, he wants to teach other people how to do it, and we're not going to do it for you. So things we're going to talk about in this session from a trading psychology and mindset. The bullet list here, and these are very, very specific things, and you could spend hours and days on each one of these bullet points. So again, I'm really have designed this talk to hit the highlights, but we're going to talk about risk management, because once you know how to chart, or once you have charts, risk management is really the number one priority. That is the name of the game. And risk management comes in many different forms, many different fashions, and it means different things to different people, because we can have different risk tolerances, we can have different account sizes, but from an absolute standpoint, we may have different risk approaches, but everyone's got to have a risk management approach. That's an absolute necessary thing that you've got to have to be successful when it comes to trading. So we'll talk a little bit about that. Trade execution and management. When you actually execute a trade, and I get questions like this all the time, as recently as today, is how do you know when to enter your level? Well, that again is another individualized and personal approach. And the people that have come from other systems or other rooms, or whatever it happens to be, they may look for confirmation. Even the folks at BTG, when Sean talks about look for his version of change control on the 1 minute chart, and you're looking for a lower high or a higher low, for the direction that you're doing. So everybody's got a different way to do that as far as trade execution. When do I get into a trade? Some people that, someone asked me, hey, do you look for a double top? Do you look for, a test? What exactly do you do when you do that? And, we'll talk a little bit about that, but essentially what I do is I have predefined levels, and when it hits my predefined level, the first touch I'm in, from that, as far as that standpoint. But once you're in, what do you do in the management of that? So we'll talk about it. A couple of nuggets that I like to talk about, if you've heard me talk about trading psychology before: process over outcome. And very simply, what that means is a lot of people focus on the outcome of making money and don't focus as much on the process of how do we actually do that. So we're going to talk about the mechanics of that and why that is so important. If you focus on the process, the outcome will happen. But a lot of people have it reversed. They don't necessarily know they have it reversed. We're all in this for the same reason, to make money, but you've got to focus on the process in order to make money. Aligning actions to your goals. Again, our goal is to make money, but so many times I see, traders' actions don't align to making money. And I've got some real life examples of that we'll talk through. And then, when we're managing, our portfolio or our book, how do we leverage positive equity that we have from a day or from a week or from a quarter, whatever your time basis happens to be. And, I realize not everybody's an intraday trader, not everybody's a swing trader. I know traders that are very successful that make 3 or 4 trades a year, and that's the ultimate definition of a swing trader. And then recovering from a loss, there's certainly do's and don'ts, when it comes to that. So let's kind of dive in, one of the highest priorities of risk management. And I'm here to tell you, and I did this when I was younger, but scared money never wins. I know you've heard that. If this is the first time you're hearing this, I'd be very surprised. But scared money does not win. Well, how do you define scared money? Well, if you are trading with your rent or your mortgage payment, that's scared money. If you've got to win trades to make your mortgage, that's scared money. If you got to win trades to put food on the table, or put gas in your car, or make your car payment, or whatever happens to be, that's scared money, and that's a very, very tough place to be. And so if you're doing that, I would highly encourage you to stop, because it's a losing proposition. It's a slow burn, if you will. You might win some, but over the long term, you're going to end up losing more than you win. It's just a no-win scenario. So scared money never wins. Use of margin. We always hear the horror story, and margin is essentially when the institution allows you to borrow money, for your trading or for your investments. There was a Robinhood story, I think a month or so ago, where somebody, inadvertently used so much margin, they were down, I don't know, over $1 million, and it didn't turn out so well, for them. So you have to understand what margin is. You have to be very, very careful with it, because you can get flipped upside down in a hurry, and you've got a margin call that you can't cover, and then you've got big problems. Percentage of book. A book is basically your account, whether it's a small account, large account, medium-sized account, multiple accounts, whatever it happens to be. No one single trade should be at a certain percentage, and it's really up for you to define. But what I would suggest is, no one single trade should be, much more than 5% plus or minus of what your book is. So if you were to lose all that, well, that's 5% of your account. If you're in a situation where you've got a small account and you're trading, 60, 70% of your book on a single trade, that's not a good recipe for success. It just isn't. I can tell you that. Knowing when not to trade is just as important as knowing what to trade or how to trade. So many times I see people, they're in a trade, and this week has been a prime example. If any of you that use Thinkorswim, Thinkorswim has had a lot of issues this week. And I noticed that yesterday, kind of right after the open, it just kind of froze. And I was chatting with someone else, and they said, "Hey, is your Thinkorswim working?" I'm like, "No." So, I did like everyone else did, logged out, logged back in, and it just wasn't working. So what a lot of people try to do is they still try to trade. Well, to me, that was the first thing right there. I said, "Hey, I'm stepping away." Not necessarily physically, because I have other stuff I could do on my computer, but I stepped away from trading. I had to know when not to trade. And that's part of risk management. Part of that kind of crept in a little bit again today. Thinkorswim was running just fine, and then it kind of died on me about mid-morning. I'm on the East Coast. So about mid-morning, it died, and I stepped away again. I just had to do that. Concepts of what's called a bracket order. Any of you that trade, futures, or I know specifically in Tradeovate, in that platform, you can set up what's called a bracket order. And I know some of the other platforms you can too. But even if your platform can't do a bracket order, you can do it manually. So essentially what that is you are investing or purchasing an even number of contracts of whatever it is. Doesn't matter if it's an NC or a Forex or commodity. And you're setting whatever your normalized stop loss would be. But then once if the trade goes in your direction, and you've got a predefined bracket set where in your first contract, first set or half, if you will, you're going to take profit at a predefined level, and then what you can do is move your stop of your remaining half, to break even or into profit, then basically you get to a risk-free status, at that point. The flip side of that is you've got your normal stop loss and you lose the entire thing. Well, that's just part of it. And if you have proper risk management in place, and it's less than 5% of your book, you're like, okay, what's my next trade? What's my next setup? But getting to a risk-free status, I can tell you, will do wonders for your trading. And you can do that in Nadex. You can do it with the micros. You can do it with minis. It doesn't matter what the instrument is. You get to that point, and you'll end up finding yourself, especially if you're a swing trader, you'll wake up and you'll forget you even have a trade on because it's just risk-free. And it's just out there, and it's, the chart's just doing what it's doing. And, because of your expertise in charting and your execution and everything you've done to date, this stuff will just begin to work for you. And it's a really good place to be as a trader. And I'm sure, to a person, all of you understand this statement of, trading live is not like demo. It just isn't. There's something about the human psyche, and it's, there's research studies on it. When people have their own personal money at risk, or if they're managing money for others, their heart rate starts to elevate, their blood pressure changes, all types of things happening with adrenaline and cortisol. It just starts to happen when you're trading with live money. And I don't care if you're on Nadex and you're trading one contract and you got $100 at risk. It's just different than trading demo. In fact, when I first started trading, futures, I started on Nadex, and the demo part was good, so I could learn the mechanics of the platform, and all the nuances and stuff about it. But for me, mentally and psychologically, the way I approached it was just different. So for me, demo was one live contract in Nadex, and I just treated it differently. And maybe you do, maybe you wouldn't, I don't know, but that's how it worked for me. And so that was a big thing. So I know that all of you understand that huge difference between, live and demo. And, when you do trade demo, which I'm not saying not to do, you should trade it as if it is your live account. But it's just hard, just because of the human psyche and I call it baggage. All the baggage that we have inside of us just seems to come out, when you're dealing with live money. So trade execution and management. I talked just a little bit about that at the open, but it comes down to, and you hear this a lot, a matter of style. What is your style? In the best way that I know how to describe a style is, I'll tell you what mine is. I do trade intraday, primarily the indices and the commodities. As far as silver and gold, I'll trade those intraday. I like to swing trade, the Forex pairs. I'm not sure why, it just kind of evolved into that. So that's kind of evolved part of into my style. As far as, when I get into a trade, there is no single correct way to do it. There's certainly, some ways are better than others. Mine is always to have, a predefined trade plan for entry and exit. And it surprises me at the number of traders that don't have that. They may have a predefined trade plan to get in, but they don't know where they're going to get out. And it's just harder to do that. Trading is hard enough as it is. Okay. But to be a consistent, profitable trader, you have to be able to have that plan ahead of time. And then you have to stick to it. So the way that you take emotions out of it is you have a process, almost like a checklist, and you follow that checklist, and it becomes, very finite and very discrete, very binary, if you will. If this happens, then I do this. There's no thinking about it. It's all planned ahead of time. And those are some of the things that are easy to say and hard to do, because, sometimes we'll get into a trade impulsively, and then we're like, oh no, now what do we do? We're in. And recently I got asked things like, well, I trade without a stop loss. Do I really need a stop loss? Well, why would you trade without a stop loss was kind of my response back to that. It's just very, very dangerous when you're setting up, risk management plans if you don't have a stop loss. And again, it comes down to individual preferences. There's not a right way or a wrong way, so to speak. But trading without a stop loss isn't something that I do. Nadex is a little different because the stop losses in theory are built in. But, you know, but how is trading like going to the gym and working out? Because so many people and traders, they'll sit in front of their computer screen, especially the ones that have been impacted or, aren't working full time or want to trade full time. Even if you are a full time trader and you're sitting in front of your computer for 8, 9, 10 hours a day, my question would be why? Because just like if you went to the gym and you worked out, you go work out for 8, 9, 10 hours a day. Like, no, you go there, you have a routine you have set for that day. I'm going to work cardio, I'm going to work weights, I'm going to work back, I'm going to work buys, tries, whatever it happens to be. You have a plan. When you go there, you do it, and then you leave. Well, trading can be very, very similar like that. You can have a plan going into the market, execute your plan, and leave. And sometimes executing your plan is a no trade day. That's just the way it is. You sit on your hands. If it doesn't come to you, it doesn't come to you. And those are things, it's almost like being a parent. You have to experience it before you really can fully understand it. I can tell you that, but if you haven't done that, you won't understand it. It's kind of like for those of you that have children versus those of you that don't have children. Those of us that are parents, we can tell you all about, being a parent, but you really fully won't understand it unless you are a parent. So not to oversimplify that analogy, but trading is like that. Unless you experience something in trading, it's hard to really understand. And those of you that have been around me for any time know that I say let the chart do its thing. Because if you've got your edge and your levels are good, the chart's going to do whatever it's going to do. And more times than not, if your levels are good, it's going to reach your level and it's going to reach your place, for target profit exits. It just does. And you guys know that from technical analysis standpoint, I continue to be amazed at how the math works, so to speak. It just does. So when we talk about process over outcome, the outcome is making money, and people focus on making money, but you need to focus on the process. Like, what is your edge? How do you define your edge? Is it technical analysis? Do you subscribe to some signal service? And it doesn't mean that it's good or bad. It's just different. It's just how do you define your edge? I don't define my edge with a signal service or indicators or stuff like that. It's just pure technical analysis. There's 5 tools that we teach in the price action mastery. And I believe, and those tools are native to any platform out there. And you can be a successful trader just using those 5 tools. So that's how I define my edge. A predefined plan, again, that comes up, that's a recurring theme, is having a predefined plan, a predefined exit. And it's just, the more you incorporate that, the better results you're going to have, because you'll be more consistent. And getting to that risk-free trade status. What's your risk tolerance? Your risk tolerance may be different than mine. And that can also change. It can be dynamic throughout the week, because risk tolerance can be based on how am I doing for the week? Am I up? Am I down? Am I kind of at break even? And we'll talk a little bit more about that in just a moment. But trading rules, everybody needs them. Regardless if it's a short list, long list, you have to have trading rules. Trading rules meaning, from all the stuff we're talking about, what is, if you don't have a risk management plan, well, one of the rules is you got to have one. At least for me, it is anyways. And, even though these are suggestions and they're strong suggestions, I can't make you do it. At the end of the day, you have to, want to do it on your own. But if you want to reach a level of consistency where you're making money every week, every month, every quarter, these are the types of practices that it takes. And I was skeptical in a lot of this stuff earlier in my trading career. Heck, I was skeptical about trading psychology. I thought it was all just kind of hogwash. I didn't think it mattered, or it mattered to other people, but it didn't matter to me, because I was a tough guy. I didn't need to practice mental toughness or mental mastery. And that was for other people. That wasn't for me. Well, let me tell you what, I learned a lot, and it was very humbling when it came to that. And the more that we dive into this, some of the stuff, quite frankly, to me was really kind of corny, I thought, when it comes down to, and I'm not I'm not a psychology person. I don't have a formal degree in that area. I have a lot of respect for the people that do. I have done a tremendous amount of self-learning and self-help when it comes to that. The human mind is very fascinating. I've done a pretty deep dive in an informal training perspective when it comes to neuroscience and how the brain works and reacts, in certain environments, and how does it respond to situations. And I've just learned so much. So all the stuff, in my younger days, I guess when I was, uh, young, single, and stupid, I've kind of changed in my ways. I'm not as young anymore. I'm not single. Maybe I'm still stupid sometimes, but hopefully not when it comes to that. So trading rules, everybody needs them. And at some point, when we have more time, I'll probably share my set of trading rules with this group. But continuous learning, you have to be able to have a mindset of continuous learning. When it comes into trading psychology, like I mentioned, trading is hard enough as it is. But just like you've put in a lot of work to understand technical analysis, it really takes a lot of work and a lot of practice from a mental performance standpoint, and to work on these things, to work on process over outcome, and to create risk management rules. It just takes work to get to that point. But if you're on this call, you're on this call for a reason, because you've gotten your trading career to a point where you're ready for it. It needs it. Maybe it's past time. Maybe you're ahead of time. Whatever it is, but you'll find that it becomes a very, very important part, of your overall trading persona, if you will. But continuous learning and feeding that, if you will. And I like to relate a lot of mental performance to athletics, primarily because I've been a high school and a college baseball coach. Those players perform at high levels. There's a lot of at stake for them, in their minds. Certainly not like at the professional level. But I guess it's kind of a long way to say I see a lot of parallels between trading and athletic performance from a mental standpoint, not from a physical, but certainly from a mental standpoint. And there was a story I heard this week. I was watching a baseball game, a major league game, and I think it was the St. Louis Cardinals. One of their pitchers, they were shut down for a couple of weeks because there was an outbreak of the virus on their team, and they were quarantined to a hotel for, I don't know if it was 14 days, whatever it happened to be. But this pitcher was doing all these drills, everything he would do at the field, he was doing it in his hotel room. And he took his bed and he put it up against the side of the wall to some degree. I've heard the story third hand, so I didn't talk to the player per se, but he was pitching in his room. He was going through the mental performance. And at first, he didn't even have a ball. I think he was using some socks or something. But he kept mentally sharp and went through the motions, if you will. And I tell you all this because it requires that sort of work when it comes to trading. You'll do stuff that's maybe not related to trading, but it's related to mental performance. And there's mental exercises, just like you can, go run for cardiovascular and physical well-being. Well, there's things you can do to go train your brain, if you will, from a mental performance standpoint. And so we'll find that's a very important part of your edge, so to speak. Aligning your actions to goals. I think everybody would agree on this call that your goal is to make money. But if you see that list that's up there, and we're probably all guilty of it at one point or another, in our trading careers, have you ever chased a trade? Have you entered too early? Have you done revenge trading? Did you have fear of missing out and just totally didn't follow your rules of your predefined plan? And then you overtrade or you undertrade and you say, well, it's not good. I got to wait. Have you blown up your account, whether it's a small account, medium account, big account, and these are the things and actions that don't align to your goals of making money. They just don't, and it's a simple fact that people do these things, but they're not aligned to their goals. Actions that align to your goals are the things we've been talking about. Having a risk management plan, having predefined entry and exit points, knowing when not to trade, having rules. Those are the types of actions that align to your goals. You look at an athletic performer like, Michael Jordan was one of the best basketball players of all time. he would go out there and his goal is to win a championship. And some of you may have seen the special that was on ESPN a couple of months ago, which was very good. But he worked so hard in practice, and he would practice his free throws. He wanted to do that so that he could be the best that he possibly could be. He would practice. So when it came to game time, it would be easier for him. Well, it's no different when it comes to trading. We can't necessarily practice trading, but we can practice the mental components that will help us when it comes to being a better trader. So let's talk about managing your week. Whether you're an intraday trader, whether you're a swing trader, these concepts will apply to you. So when we look at a first trade of the week, and these are things, a lot of these concepts have been gleaned from Mike Perigo. I've adapted, into my style, if you will. But the first trade of the week needs to be a very highly scrutinized trade, meaning, you try to have something that's as best in your favor as can be, as much confluence in your chart, because it's so much, it's so important to start the week with positive equity. It's not to say you can't recover if you don't, but it just gives us a different approach for the rest of the week. And it almost gives us a mental at ease, if you will, if we start that first trade with a win. And sometimes what that means on Monday is not taking a trade, knowing when not to trade, like I mentioned a couple of slides ago. So if you can start your first trade of the week with a very highly scrutinized trade, with your predefined entry and exits, then we've got positive equity to work on top of the book that we've got. And then so your next 5 or 10 trades, you could divide up, the risk portion of what's in your positive equity and not even get to your book yet. And so again, these are the types of practices that successful traders do, consistently winning traders that have profitable weeks, profitable months, profitable quarters, is that type of practice. So you leverage that positive equity, and maybe you split it up over your next 3 trades or 5 trades or 10 trades, however you want to do that, that's fine. And the more you can roll that positive equity, the better off it's going to be. But let's say that we have a very highly scrutinized trade of the week and it's a loss. Okay. I know we've all had that happen to us. I know I have for sure. So how do we recover from that loss? Well, it's a little bit different, because what we want to be able to do is get back to a net zero as quick as possible. So we may not hold trades as long. We may not, especially if you're an intraday trader, we may not hold for the entire move of a particular, fib, because we want to lock in profits to get back to net zero as quick as possible. Once we get back to zero, we're again looking for that highly scrutinized trade so that we can get to positive equity. At the end of the week, when we end with positive equity, we want to roll that out, potentially. And again, these are suggestions, not telling you what to do. But from a practice standpoint, and what I've learned from Mike and from others, I treat each week as a zero-sum game. In my trading accounts, I start with the same amount, and at the end of the week, I roll out my positive equity into other longer-term, investments, or maybe I spend it. And I was telling somebody not too long ago, when I'm in a trade and it's a Friday and I'm thinking about leveraging some of that positive equity, I said, do I want to risk losing this, or do I want to go spend this money on my wife and kids later today? And more times than not, I'll go spend it on my wife and kids later that day. And so it's the little things. And again, you'll find these nuances that are particular to you. What are you going to do with those winnings? And I think it's important to be able to visualize those. So at the end of the day, from a trading perspective, and for those of you in the course, a lot of the rest of the presentation and resources are in the course. For the chart members that haven't seen this before, I'll make sure that you have the links and access to the resources as we move through them. But at the end of the day, and a lot of this is really developed and curated by myself from things that I've seen in the marketplace, and a lot of it from Mark Douglas. And anything can happen in the market, just anything. You have to be able to accept that. Sometimes, I hear people say, well, the market just can't keep going up. It just can't. Well, it can. Let me tell you, it can. And when it's going down, say, well, gee, it's already hit these fib levels. We're already been through this resistance, it's been through this segment. It's at a month. It just can't go any lower. Well, let me tell you, it can, and it has. And if you think like that, then again, that's not the recipe for success. Next thing that Mark Douglas, these are some of his major points here. You don't need to know what is going to happen next in order to make money. You don't have to know the news. You don't have to know. You don't have to know in advance, because we need to get out of the prediction business and be in the reaction business. So you don't have to know what's going on. And there's a random distribution between wins and losses for any given set of variables that define an edge. And a simple example of that is flipping a coin. Flipping a coin, if you're calling heads, your edge is 50-50, that you're going to win. Well, with our charts, in the charts that you know how to develop, your edge is probably higher than 50-50. Maybe it's 60, 70, 80%, whatever it is. But there's still a random distribution. Even if you have, and I think we all have to agree, there's no 100% guarantee. So even if you thought you had a 99% lock, well, you could still lose. Okay. So the fact is that you can lose any trade, regardless of your edge. And there's a random distribution whether you win or lose. Kind of like if you flip a coin, it's coming up heads or tails. You got one or two choices, and you have no way to know which way the next one's going to be. And so what Mark Douglas talked about is, even with your setups, even if they're 60, 70% solid, on a historical basis, you still have a chance to lose that. And that's the point that he makes getting there. And there's a random distribution. So let's say you flipped a coin 100 times, and you're on flip number 30, and the last 10 of them have all been heads. So what's the probability that the next flip, number 31, is going to be heads again? And a lot of people say, well, gee, the last 10 were just heads, so this has got to be 80, 90% it's going to be heads. Well, the reality is it's still 50-50. It hasn't changed. Okay. So even though it's a 50-50 and you got 10 in a row, it doesn't change what the next one's going to be. And so the reason he goes through that is, if you lose 4 or 5 trades in a row, it has no bearing on your next one. And if you've won 4 or 5 in a row, it has no bearing in your next one. So you can't change how you approach that. Some people, they'll break their rules. They won't align their actions to what their goals are of making money. They'll trade bigger. They'll trade without a stop loss. I'm just going to get a few points. I'm getting out of here. And all of a sudden you get a flash. You just can't do that. But so an edge is nothing more than an indication of a higher probability of one thing happening over another. And that's our charts. When you're flipping a coin, the probability is equal. If you have the probability, if you got a 50-50 shot on a trade, I'm not sure I'm taking it. That's not a highly scrutinized trade. I might leverage some positive equity towards the end of the week at a 50-50, but probably not, because I'm looking for a reward to risk that's more than 1-to-1. I'm going to look for something that's at least 2 or 3-to-1, if not even higher when it comes to that. And every moment in the market is unique. And even though price has a very good memory, every moment in the market is unique, because you'll never have the same traders in there at the same time with the same news and the same economic impact. It just, there's no 2 moments that are the same in the marketplace. So it doesn't matter that, the last time price came up and it was like, oh, it did this fake out, so it's going to do a fake out again. You can't assume that. You just can't. Experience can help you identify what the potentials are and what the possibilities are, but there's no guarantee that what happened before is going to happen again in the future. There just isn't. So here are some of the resources from Mark Douglas. If you've not been introduced to Trading in the Zone, there's a free PDF floating around on the internet. You can just Google it. It'll come up. It's inside the course as well. It's in the psychology, trading psychology lessons. It's very long. It's very good. I've probably read it 3 times. I would encourage you to get yourself a copy of that and read through it. Because a lot of the stuff that I've based today's talk on comes from that, and a lot of the trading aspects I do from a psychology perspective are almost exclusively driven from Mark Douglas's work. Unfortunately, he passed away a few years ago and is no longer with us, but he left some just tremendous resources. There is a powerful series. It was like a 2-day seminar, live event that was recorded. I'm not sure where it was. It was somewhere in the US. And there's 4 videos on YouTube and it's about 6 hours. And I've probably watched those at least a half a dozen times myself, and I pick up something new every time. But those are the types of things that it takes. When I said it's not easy, and it's it's not easy to practice trading psychology and mindset. It does take a lot of work. Just as hard as you've worked to learn trading skills, charting skills, we have to be able to spend almost as much time on the trading skills and the emotional, psychological impacts of those. So if you've not heard of Mark Douglas, I would again encourage you to familiarize yourself, with his work. It's just, phenomenal resource, and a lot of the stuff, like I said, I've curated into, the lessons that we have from a trading psychology perspective. So I'm at a point. I'm actually going to take a pause here. I'm going to open it up for questions. We've got probably 10 or 15 minutes for questions before I finish off with a special offer that we have on our last slide here. So if you want to go ahead and unmute yourself, that's fine. I can, if you want to raise your hand, I can do that as well.
Hey, Tom, this is Vijay here.
Yes.
Hey, thank you so much for the background on the psychology. It's amazing. I know we have had multiple one-on-one sessions, but listening to the psychology mindset once again prompts me to ask another question for benefits of everybody. I know the risk management is one of the most critical components in the trading process. And when you leverage different tools for a different type of setup and the process, the risk management may change. For example, Nadex has a built-in risk management, your max of $100 loss, whereas
Right.
Trader Weight is a different component, right? So when you decide or plan your entry point and an exit point, and when you chart out the trade plan the prior day or the beginning of the day, how do you decide what type of risk management and what your stop loss positions are? When you look at IG, or when you look at Nadex, when you look at Trader with multiple tools, because some tools have certain limitations where you can't control stop loss.
Right. Yeah. So my approach to those in my planning varies depending on what platform. So Nadex is totally different than if I'm trading on Tradeovate or IG. But it's always driven around two things: the reward to risk potential, and then structure, market structure. What has happened? When you look left on the chart, what has happened? One of the things that I developed from a Nadex perspective, and I think you and I may have talked about this before. I didn't particularly like risking, an all or nothing on the binary perspective, and I thought that it would be okay to stop loss binaries, 2 hours or longer. I never do the 5 minutes or the 20 minutes. So if you're doing those, again, that's not a good, not you, VJ, but people in general. If they're doing 5 minutes or 20 minutes, that's not a recipe for success. But I developed a system within Nadex that would provide me a 2-to-1 reward to risk ratio. And it usually revolved around buying or selling at the money. And so I was willing to risk $20 to make 40. And so let's say, I sold something for 53. If price went against me to 73, I would get out and stop loss it. Conversely, I had an automatic working take profit order at plus 40, which was 13. And so, and you can download from the Chart Pros website. I actually wrote an article, an ebook on how to do that, and I recorded 2 series of 20 trades. So 40 trades total to do that. And it's actually was a winning strategy, a profitable strategy, from an Nadex perspective to do that. I still felt like I was leaving money on the table, even at 2-to-1, because from a swing trade perspective, I know I can get much better reward to risk, but I was still learning. But that's what I wanted to do. And with out of the money, you could even get higher reward to risk from that standpoint. So that, and that's a very detailed way of how I approached it with Nadex. And I won't go into as much detail with like, Tradeovate or IG, because those are the platforms that I use. But when I'm trading, let's say, an indices future on Tradeovate, I'm almost exclusively using bracket orders so I can get to a risk-free status as quickly as possible. With the VIX kind of down to where it is now in the low 20 range, and the volatility is not as high as it had been before. A moderate to reasonable stop loss range, and I've posted these before, and they're really modeled off of Mike. But on ES, if your levels are good, you can trade with 2 to 3 point stop loss. And if you lose that, you're out. It's just the way it goes. But I've seen people that trade much bigger stop losses. I've seen people that trade no stop losses. NQ gets a little bit wider, of course, and so would YM. But on those platforms, it can, if you do an intraday, those are kind of tight stops. When I'm swing trading on Forex, and I'm really confident in my level, and they're structured to the left, the stop loss, might be 20 or 30 pips. It's either going to work or not within that range. And usually there's structure to the left that will support that thesis, if you will. And so it just becomes, defining the risk tolerance and risk management that's appropriate for you within those platforms, and then executing it over and over and over and over again. And that's how you become consistently profitable. And, you might not get the big home runs, but man, let's hit singles and doubles and a few triples here and there. I don't have to have, a 200-point winner on NQ. Now, does NQ, move that much in a day? Sure, frequently. But it's much easier to get, 10, 20-point winners than it is one 200-point winner. It just is. And with bracket orders, you can get to risk-free status and get those 20-point winners all day long. And I really don't care, how I make the money. I don't have to make it all at once. At the end of the day, it comes down to the results. So thank you for that question. Somebody said you don't set pending order. So there's a question in chat says you don't set pending order for entry. No, I don't. You watch, and when price gets to your level, you enter straight away, or you wait. No, I don't see what price if I'm gonna enter, let's say an ES trade, and my entry is 33.88 half, and I'm gonna sell or buy, whatever happens to be. And lots of times what I'll do, I'll set an alert on Thinkorswim for that level. And because I'm entering it manually, that's what I'll do is enter that manually. So yeah, first touch of my level. And again, that is modeled straight from Mike Perigo. Once you get to the point where you're that confident in your charts, that's a very good place to be. And that's a good strategy to take with order entries. Who's got the next question?
Tom, can you hear me okay?
Yeah, I got you. Who is this?
Jay.
Oh, okay.
So I just want to clarify what you said. So basically the entries are all market orders, correct? You're not using limit orders.
Again, that's another individual style. If you want to do that, I will more times than not use limit orders, because with the spread, the market orders can really, eat away at you over time. And so what that means is I run the risk of not getting filled. And if that happens, oh well.
Right. And do any of the markets have preference in terms of, if you're charting well in your levels and you're really following, the rules with all the different things we're learning, do any of the markets have more of a follow along better than some of the other ones, or is it all pretty equal in terms of how you chart them? And
what do you mean follow?
What's that?
What do you mean when you say follow?
Well, I mean they just adhere to the rules, the types of things that we're using, with the, the trend lines and the Fibonacci's and all that. Does one market seem to have a little bit more consistency?
No, not at all. That, a chart is a chart is a chart. So it really, I have not experienced, any instrument, Forex or whatever happens to be, equities, options. When you're charting something, it's the technical analysis. It's all driven by math. Now what you can see a difference sometimes between different platforms, or the spreads may be different between IG and Oanda and Thinkorswim, and that you have no control over other than deciding which platform you're going to use.
Okay.
I put these links back up there too. I can make sure everybody has access to those.
Yeah, I copied them down.
Yeah, you can go to YouTube and just search for it, and they'll start showing up. And once you get, you might find, part 3 of 4 first, but then you'll be able to find the other ones too. We have a few more minutes for questions if anyone else, has anything. I'm really surprised. I kind of bet myself, and I just lost this bet. Somebody was going to ask me about trading all-time highs, because the markets, NQ is this insane. ES wants to seems like it wants to rip to new all-time highs, and YM's not that far behind it. And it's challenging it really is challenging to trade all-time highs. But with the advanced Fibonacci's that we have with high to high, particularly, and some of the stuff that I know Mike is working on an advanced features course that works on what some of the algorithms are, both bull and bear standpoint. The pullback longs have been killer for the last, since March. They just have, short-term, long-term. Someone sent me a private message today and said, hey, what do you think about short and NQ at such and such level, which would have been a new all-time high? I'm like, no, I prefer the pullback long, and that's what happened at pullback, and it just screamed, to new all-time highs today. So I appreciate no one asking me about trading all-time highs, but I figured I would throw that in there because that's something, everybody thinks about but may not want to ask. It's just hard. It's not saying you can't trade all-time highs. It's just more difficult because if you don't have as much of an edge in your favor with not having historical price action at that level, but we can project stuff. And if anybody has seen the chart of Tesla lately, you can project to the moon. This it's not something that you'd want to short. At least I wouldn't, from a statistical standpoint, as far as that goes. So I don't see any other questions. If you do have one and I'm missing it, just unmute yourself before we close, because what we have for you today, when we just launched this over the weekend, it's a special offer. All the people on our email list had first access to it, but we started a trading psychology mindset bootcamp that's going to be individual, one-on-one, and we're only taking 10 traders, and you can find that information on our website. I think for those of you that know me, you know that I'm not a pushy person. I really hesitated to even put this slide in there, but I've had so many people ask me to do stuff like this. So I feel like I'm satisfying requests when people ask me about trading psychology, and hey, people suggest, hey, you should really offer this because it's so helpful to so many people. So there, and that's really what inspires me, is to pay it forward and help other people. Some of you have heard me say this before. I don't do chart pros for the money. I do it to help other people, but I won't do it for free. And I think you can, certainly understand that and hopefully respect that approach. All right, so I don't see any more questions in chat. I don't see anybody unmuting themselves, so I appreciate you being here today. As far as the course goes, the Price Action Mastery, I really consider this, and I don't have any dates for a next session or anything, but I really consider this trading psychology more of a introductory or kind of a part 1 just because there is so much that you can cover in a group basis like this. And again, I could talk to people and share information. We could go through it for the next 4 years and still not cover everything that there is, but we can always continue to learn. We can always continue to get better. There is no one single right way out there to do it, but you got to find the way that's right for you. So with that, I'm going to leave you, and we'll see you out there in the markets.
Sorry, Tom, I think there's one question on the chat window.
Do I take 2-hour binary more or day? It really depends. That came from Moha. Thanks for the question. It just depends. Me personally, I'll take a lot of 2-hour binaries, but it's all driven by the structure and price action to the left, especially if there's like a supplier demand zone. And if it spent a lot of time in that supplier demand zone, I'm going to go with a longer binary. If it spent, and I'll go down to the lower time frames, even a 1 minute, to see what price action was in that supplier demand zone. And if it spent like 5 minutes in that, then I'm doing a 2-hour binary. If it spent 2 hours, then I might pick a daily. But at some point, the chart's going to do what it's going to do. We can't overthink it and just let it do what it's going to do. And from a Nadex perspective, with that shot clock on there, it's kind of not only do you have to have the direction, but you have to have the time perspective as well. So
sorry, Tom. Thank you. And I do have one last question on the specific course that you posted on the last slide.
Yes.
Could you tell that if that's the course that I went through, the price action, action mastery, right? Through a series of webinars. This is a little different. It's got a one-on-one attention for the first-time traders. Is it a little different, or is it the same course?
No, this is different. It's like this trading psychology, but on steroids and on an individual basis. And so we just added this over the weekend. There's a new link on our website about trading psychology bootcamp.
Yep.
And you can see all this out here. So today was a very high level of kind of what that would incorporate. And we've had one of the members go through somewhat before. He kind of went through it 3 times. He stayed in it so long, he kept having such success. So if any of you guys know Blake, I don't know if Blake's on here, but we did probably, I don't know, 20 to 25 sessions in a 3 or 4 month period. And he's just a trade monster now.
I'll reach out to you offline on the how to go about it as the next step. Okay.
Sure. I'll check chat. Let's see one more time. What do you mean trading platform? Oh, Nadex. Okay, I got it. So Jazzman J, yeah, Nadex is a trading platform. That's a little different. It's very binary in its approach. You win or lose, and each contract is worth $100. But yeah, go to nadex.com. And it's actually a good way to start, because most traders that start out lose money, and you lose less on Nadex in theory. So, all right, I'm going to leave it with everybody. We'll get this recording up in the next day or so. I appreciate everyone being here, and we'll see you out in the markets.